Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session for the Forex Trading Room on July 19th of 2020. We'll be going through our regular agenda. There is one change, though. I want to take a look at the longer view on the market. So instead of daily charts, we're going to be looking at weekly charts this session. And I do this every now and then. So this is just a normal variation on our regular program. Otherwise, we'll continue with the prior week's results, our currency strength meter, fundamental announcements, as I said, the major pairs on the weekly instead of the daily, any setups we see in progress, and a few words in conclusion. Term letter, we had one trade close out against the Aussie Cat short, and we did enter two new trades, longs on euro dollar and pound dollar. So those are the only trades open right now on the long-term account. So actually, we have more trades open now than before. But again, we're looking at longer-term views. And that is the purpose of looking at the weekly charts this time around. For the last week or so, I've been searching for longer-term opportunities, given that the market right now is decidedly sideways. So we'll be looking at that. Intermediate term ledger, a little bit of further drawdown on a few trades closing against. We have 1, 2, 3, 4, 5 trades open right now at differing levels of profit loss. Again, this is a more longer term view. And on the short term, we had a down week by about 4%. Again, not the biggest movement. The actual loss was less than $100. We had two trades close in our favor for against the euro dollar in particular. Was not a happy camper this time around. So that's where we are right now. We're seeing the market start to wake up a little bit. So there have been some attempts at breakouts, but so far all of these have failed. But what that's telling us is that there is some stress in the market, and very likely the next week, 2 weeks, 3 weeks, shorter time frame than usual, we're going to see a breakout on some of these currencies. Obviously, there's no way of predicting which ones they are, so we'll rely on our technicals for our entries and the rest of our normal procedures, but the market is giving us a little bit of advance warning that some movements may be afoot. Notes and opportunities for improvement. Again, the market is still sideways, though, as mentioned, signs of activity are starting to appear. Pending orders are in place, and we keep adjusting them to make sure we're not taking in too early on some of these trades. We want to be in position for the bigger market breakouts, not the many fake outs that are sure to happen before a bigger move is seen. We are seeing a surge of COVID infections in many places around the globe as the reopening seems to, well, there's a couple of things going on there. They're saying that the reopening was premature. I'm still of a mindset that this COVID thing isn't as dire a threat as it's being made out to. We seem to be in a more panic-prone mindset this time around than in previous pandemics, of which this is not the first one our human race has seen. So the infection rates, mortality rates, and such are not as bad as some of the more recent ones, like the 1918 Spanish flu. But the reaction has been much more extreme this time around. And of course, we are living in a globalized world. So what happens in one part of the world, let's just pick China for the example, will impact everybody else, if only because there's a lot of commerce between China and the rest of the world. So we're seeing shortages in some products. But again, the reaction has not helped anything. And it would be pretty much common sense to assume that we are going to see more COVID infections if we go back to some semblance of normal. And I don't see that as necessarily a bad thing. Again, the rate of mortality seems to be very, very low. We're just making the problem worse by overreacting like this. But again, that's one man's opinion. Make of it as you will. But the fact that infections are rising and the news cycle is what drives the market obviously has many people very cautious when it comes to trading and investing. Oil continues to hold gains. So after that dismal crash back in March, we're back to $40 a barrel, and that's been holding steady for weeks now. And silver and gold are not only steady, they are at multi-year highs. In the case of gold, I think it's at an all-time high or very close to it right now. This, of course, is also a little bit of common sense there. Silver and gold, bullion in general, are safe havens when people are nervous about the market. So there's been a lot of buying of silver and gold, and silver should probably be a lot higher than it is right now. If you try to buy silver, for example, you'll find that the spot price is not what you're going to get silver for. Nobody is selling at the spot price. You're going to have to pay a premium of $5 or more per ounce just to get into silver. So even there, the market, I hesitate to use the word manipulation, but to some degree there is some of that going on. Silver has been held artificially low for a very long time, and it looks like it's not working anymore. And of course, a reminder, our live event, regardless of viruses, infections, lockdowns, or whatever, is still going to be happening September 30th through October 2nd. That is the venue. If we can use the hotel I've been planning on using, well, we will. If not, I do have an alternate venue completely under my control, so I cannot be locked out of it. And we will be having this seminar there. Stay tuned to the website for any updates on what is happening. But again, I guarantee that it will be happening one way or another. Relative strength meter, and this is our new forced on us because the old one seems to have gone away. So we're looking at the columns on the extreme right of the chart. The rightmost is monthly, next one to the left is weekly. So we can see that the big movers for the month have been silver. Silver is up 6.42%. It's the biggest mover in the entire column, and that again is telling you what I just finished saying, that silver and gold are definitely moving. Let's see if there's any other large numbers. Not really. So the largest numbers seem to be 1.21%, the movement on the Aussie CAD, 1.23% the Aussie dollar. So the Australian dollar is at its 12-month high right now. And we're going to be looking at that chart on the weekly, and you'll see that a 12-month high is really nothing. It still has a lot of room towards the top zone, but market commentators love to point out 12-month and 5-year highs as if they meant anything. So take that with a grain of salt. So massive movement on silver. Gold is also better for the month by 1.67%, which taking into account is very close to its high is significant. Kiwi dollar up 1.5, pound dollar 1.24, Euro CAD 1.59. So we are seeing some movement, but again, a 1% on the monthly is really nothing. This is still a sideways market. On the weekly, next column to the left, we see that again, silver had an increase of 3.47% just for the week. So half of the monthly movement can be found in just the prior week. Everything else, well, gold a little bit better than 0.5 percentage point. Nothing else seems to have done any big moves for the week. Again, sideways market, people. Fundamental announcements for the week. We've got a pretty light calendar. The only thing that I would want to trade, and that's simply because I like to trade at least one fund a week, meetings. I probably wouldn't have bothered on a busier week, but this is the only thing out there that is even half tradable. We do have the Bank of Japan's monetary policy meeting minutes coming out in about a couple of hours, a little bit before 8 p.m. U.S. Eastern time tonight. So that may do something for the yen, but I'm not going to be trading that one live. We will be trading tomorrow for the RBA meeting minutes out of the Reserve Bank of Australia. 9:30 p.m. So I'll be opening up the trading room probably around 9:15. This will be a later evening session than normal to accommodate for the fundies. So it'll be in your emails coming out if you want to trade it live with me. Otherwise, well, the copy trader will be taking care of you regardless. With that, we move on to the charts. As I mentioned, oil is holding on to its most recent gains, so it seems to have plateaued at $40 a barrel and has been holding steady there since sometime in early June, maybe late May. So no significant movement out of oil, but the fact that it hasn't moved back down is significant to a degree. So it looks like that oil recovery halfway back to its prior price range is going to be staying with us. We'll see if it manages to make its way further up. The people in the know, the commentators, the talking heads keep saying that next year is going to be very much a payback on travel. So a lot of people who couldn't travel this year are going to be traveling next year. Transportation is going to be big again for 2021, this, that, and the other. I don't subscribe to it or not subscribe to it. I'm not in the predicting game, but it is, I guess, of import that this is what is being said. So we may have further upward outlook for oil towards the end of the year, beginning of the new year. We'll see what happens, but take that, as always, with a grain of salt. With that, we're going to move into our currency charts. And again, reminder, we normally look at daily charts. We are looking at weekly charts this time around, and you can see the label there at the top left of the chart. It is the euro dollar weekly. As we can see, it is at a very, very strong level of support resistance right now, which has been holding as resistance since way back in 2016, possibly further back, but I'm only looking at this time frame right now, after which it moved down even lower than where it is right now and managed to make its way not only back above that level, but went on to make an absolute high around 125. The fact that it never reached the prior low indicates to me from a technical perspective that there's every chance that this is going to go back to the very top and perhaps even deeper, I shouldn't say deeper, even further above that prior point. And this is something that you're going to be wanting to look at more when you're looking at these longer term charts and time frames, is your macroeconomics are going to be very, very important. So I do see in the bigger scheme, in the bigger picture, I see dollar weakness for a variety of reasons. Our election cycle, the uncertainty of whether we'll have President Trump for another 4 years, or we're going to get Joe Biden. And I'm not going to get into politics here, but the market is not going to react well if Biden is showing strength before the election. So we may see the dollar definitely take a hit, regardless of who comes out on top, simply due to the uncertainty. It's not going to be helped by the fact that we're going into a recession as we speak, with a lot of people out of jobs, being stuck at home, the government trying to print money to send to these people, so keep them off the streets and not rioting and stuff like that. So the dollar is in a particularly delicate position, and across the board, I am expecting dollar weakness, but again, we try not to trade predictions or what we think, but rather what the market is doing. However, on the longer term approach, you do have to have a position, be it dollar strength, dollar weakness, euro strength, euro weakness, and be brave enough to trade it. That is the only way to make the big amounts of money in longer term trading, is to have a position and put your money where your mouth is. So I am long on the euro dollar on the long term account right now, looking for that further breakout towards the next levels of support resistance. So we opened that trade last week. Pound dollar, same thing. Pound dollar, we can see a bit more of a longer term sideways movement. Of course, we have Brexit here, the Brexit vote referendum here at the beginning of the chart, which caused a massive collapse in the pound dollar. But take a look, it did regain most of it in the next couple of years. And by the time we roll into February of 2018, and even before late 2017, it had made its way not back to where it had been in the 150s before the referendum, but it did make it back to 144 almost, which is close enough. So definitely the pound never truly gave up the ghost. And then, of course, we had the further deterioration when Brexit seemed to linger on for years and years and years, made a lower low not too long ago. So this is this year, this is 2020 over here that we're looking at, just as quickly recovered back to above the Brexit lows, and is now sort of making its way back up. Another one where I would expect some recovery, at least to the 130s before all is said and done, especially if we're assisted by dollar weakness along the way. USD Jpy sideways chart. It's been sideways for quite a long time. I would say that it entered the sideways period all the way back here in 2016 and has been bouncing between 114 at its highest and about 104.50 at its lowest. Yes, it has broken out below, but not for long periods of time. Quickly pops back up. And again, this one is very, very sensitive. And longer term, we can see that it is directionless. Longer term, it is sideways. So this is not going to be a focus for me in longer term trading. But for the intermediate, it's probably much better suited as we see it continue to weave between the highs and lows of its channel. USD Canadian, and it has been steadily heading up, went sideways for a while. And remember, this is weekly. These are extremely long periods of time. These are years. This is 2 years worth of data right there in this sideways period. Finally broke out above with a vengeance, made an all-time, or at least on the weekly visible portion, its highest point, and then went right back down to that sideways channel, popped out again above. This is another one where I don't see a long-term approach, but definitely for shorter terms, intermediate and short term, this is a good pair to be traded. So I'm not going to be looking for long-term opportunities everywhere, just where I see that the charts are in our favor, as well as my humble knowledge of macroeconomics on these different world economies. USD Swiss, another very sideways pair that is now well on its way to the lowest point of its sideways channel. Very wide channel all the way from the 102 down to the, I'm going to say 93, 94 level. So it does have about 800 pips worth of range on its sideways channel. It does go directional for long periods of time. This is a good thing. This is very tradable. At the same time, you don't want to be caught in this kind of cycle when it's going sideways. Recently, it has been going down with rather wide movements every week, but still heading down, very close to support right now. So in this case, I would probably trade it, but I'd be looking for a either a breakout from the bottom, which is telling us it's going to be really moving, or more likely a turnaround and a return to some of the regions in the channel. Aussie dollar, and remember I mentioned this at the start, we've got commentators. I follow the news cycle on currencies pretty strongly. We have them commenting that this is very near or at a 12-month high, and that is true. I mean, if we go back to, this is July of 2020 today. If we go back to July of 2019, somewhere around here, we can see that indeed it is at a 12-month high. Who cares? If we go further back to 3 years, 4 years, 5 years, we can see that it had been much, much higher. And indeed, it is breaking back into a previous price range. So I would say that there's every opportunity for it to keep going and we'll be looking for that. It is crossing the Ichimoku cloud on the weekly, another very bullish indicator. So if it does break above the next level of resistance, we're probably going to go into a longer term trade towards the top of the chart. Kiwi dollar, much the same, though it's not at the 12-month high. It's getting very close. The 12-month high is somewhere back here. This is a year ago, but it has been, V-shaped recovery. It's starting to head up. Probably not good for a longer-term trade until it does break out above these resistance levels. But for shorter terms, intermediate or short term, it is looking good for a test of these regions. And we're looking at 200 plus pips, maybe even more, depending how far it goes. If it does break above, longer term is definitely in play as well. So I'll be playing that by ear if and when it comes to that. Aussie Canadian, another breakout 12-month high. Obviously, we can see that very clearly on the chart, but probably even more than that. This is January of last year, so not quite a 2-year high, but almost. It needs to beat out this this previous high here, and it's not that far away. However, with the Canadian, I don't get that that feeling that it's going to be weakening much further. Indeed, I was trying to trade this one down until obviously last week put the kibosh on it. But I'm still looking for a turnaround. And even if it doesn't go all the way down, a test of some of these levels of support would be much appreciated. So I'm sticking a pin in this one for the time being, but I'll be keeping an eye on it. Euro Swiss, another one that is looking as if it's been very, very pummeled recently. Obviously, it's coming up from a high, coming out of a high back in early 2018, and it just completely collapsed in the following 2 years. Tried to stage a recovery a few weeks ago, didn't quite make it, trying again. At some point, we're going to start seeing a Kumo cross and a return to higher levels, at least around this region of previous resistance, and that is the 114.75, which is going to give us about 700 pips from where it is right now. This is one that I've been short on for quite a long time. We pretty much captured all of this movement over the couple of years we were trading it. It's now gone a little bit schizoid and is moving in both directions. And what that's telling me is that the downward movement may be played out. I am looking for opportunities to start trading it up. Again, the macros are going to be more important than what the charts are actually showing us. And whatever happens in the Eurozone, of which both the Euro and the Swiss, of course, are members, we'll have to play that one by ear. But the Swiss is a safe haven currency, and there's every chance that any bad news coming out of Europe is going to play into a recovery of the Euro Swiss to these previous regions. So another one we'll be looking at cautiously, but with high interest as well. Euro pound, another very sideways pair if we're looking at the weekly, going from a high of 93 to a low of 82, 83. So about 1,000 pips worth of range. It is trying to go back to the top right now, testing the underside of a trend line. Not sure that it's going to make it. It's already showing signs of faltering, and there may be a test of the Kumo before all is said and done, which is down here around the 88. So that may be happening. But in general, we can still see that this is sideways, goes sideways in even tighter ranges for the longest periods of time. And it's too near the top to trade it up. Likely we're going to see it do a test. But again, we're not trying to predict. We're trying to make money here. But keep an eye on this one for opportunities more towards the downside than towards the upside. Euro JPY, following a trend line down for the longest period, tried to do a bit of a recovery, failed, went all the way back down again, trying again. And it has been following this rather steep trend line for a few weeks. We'll see if it does have the strength to continue up. In all likelihood, with the yen being, I would say, uh, treated unfairly at this stage in time, we may see a return to the previous high from not too long ago, which would join it back to this trend line or even a little bit higher. So we'll be looking at those as well for opportunities. Euro Canadian looks like an EKG nightmare. It just goes in all directions, up, down, and this is weekly. So these were extremely long periods of time where it not only goes in a direction, but in between it takes breathers to do nothing much or even to retrace with violence and then just as violently come back. Right now, it is just showing a fishbone type of pattern here with long wicks on either side of these weekly candles. It hasn't been able to convincingly pierce resistance for a while. It did do it last week, but not didn't stay or hasn't. Well, it is staying, but I'm curious to see what it does this week. Very likely will give us an opportunity to trade back down to support to the top of the Kumo for a I'm going to say that that's a 400 to 500 pip opportunity. So we'll keep an eye on that. Could go in either direction. So I want to see it move before we do anything. So again, nothing for the longer term, but definitely something we can play to our advantage in the shorter time frames. Pound JPY doesn't seem to have any rhyme or reason. Goes up, goes down, goes up, goes down. So in general, sideways, but seems to stick closer to the top than to where it is right now. And we may see an attempt at it returning towards these previous levels. And again, this violence back here is the Brexit referendum back in 2016. So that's the explanation for this. But much like the others, it quickly recovered almost to where it was before, collapsed again, up again, collapsed, and now making its way up yet again, giving us some good 1,300 to 1,500 pip opportunities if we see a return to the previous highs. Aussie JPY in general heading down. This is a bearish trend for the longest time, and only recently, in the past 3 or so months, an attempt to break out towards the top. If we do have a breakout, and it is looking like one, we may have a pretty good opportunity either to this point or higher, and that would be a long-term trade. Euro New Zealand following sloppily, but still following a very, very long running trend line. And it's right on that trend line right now. So it's making its way sluggishly up. It does have significant breakouts and retracements along the way. Also goes somewhat sideways at times. Very, very big mover. Some of these distances are just so extreme. They're sometimes unbelievable. We're talking 2,000 plus pips in a few weeks, and then a little bit longer time frame, but a return to those previous levels. If it continues doing that, and notice that the breaks below this trend line are very few over here and more recently over here in the last week or two. So the downside, that trend line will be good support until, of course, it stops being good support. But for now, you have to treat it as good support. Any longer-term trade should be up, and the stop loss should be below that trend line. So this is a prime example of technicals at play, and we'll be looking for the next opportunity to follow that. Pound Canadian also following a trend line, though a much shorter one, but it is following a trend line up. Also violent movements away from the trend line and returns just as quick, and is just making its way up. At some point, I do feel this is sideways. This is a sideways channel right here, a rather wide one, about 2,000 pips or so. And I think that it's overdue for a test of the bottom again at some point. This is another pound chart. So this is Brexit back here. We can see how awful it was for the Brits. And the recovery was not as quick as with some of the other pairs, but recover it did before also not as quickly as the others, collapsing and recently staging another attempt at going up. So this one is probably, I think I want to be short on it when we have a break, but at some point we'll probably also get another opportunity to trade it up to the top of the channel. And last but not least, our pound Swiss, also a little bit haphazard. I do think there is a sideways channel here that is being broken right now. So a return to the previous channel is probably in the works. The Swiss doesn't seem to be getting any stronger of late. However, the pound has. And if you see of all the pound pairs, this one is the one that has recovered the least in recent months. So from that bottom it made, this one has really gone up the least. This is a prime candidate for a longer term trade towards the top. So this is a trade I am probably going to take in the very near future, open up a long-term trade with the stop loss somewhere down here, which is going to be whatever that is, 300 to 400 pips, and wait it out for a trip back towards the top. So stay tuned for that. That is the end of our chart. Setups we see in progress as the week begins are the same as before. The only thing I've changed, well, is coronavirus across the board. And anybody who tells you that coronavirus is not the main factor in the market right now is smoking something wrong in their pipe. So coronavirus is definitely going to be front and center. But Australia had been looking at a really good economic outlook in the last month or so. That seems to be changing. I'm starting to hear grumbles and concerns out of Australia that I hadn't been hearing in the last month. So instead of positive economic outlook, I have placed shifting economic outlook. Not a huge change. It's like saying, the earth is harmless, changing that to mostly harmless in the Hitchhiker's Guide, but still. You should be taking that into account that Australia is not looking as rosy as it was looking even a month ago. That's it. My words here of ending words, concluding words, and nothing new. I think I've made it perfectly clear in what I said earlier in this presentation. I am starting to look at longer term opportunities simply because it's that kind of market. Market shifts do happen in cycles, and the current cycle is sideways. We can't get away from that. This too shall pass. At some point, the charts will break up or break down, and we'll have the better shorter term opportunities. But at the same time, those opportunities will be playing into longer term cycles, and I want to start buying shares in those longer term movements. So this is why my focus this week was the longer term opportunities and the long term account. So that's what we'll be looking at for a while. That doesn't mean we're going to be ignoring the shorter term. We're still going to be trading it, same as we always do. But at this point, I'm not expecting much until we see those breakouts start to happen. In the sideways market, you're just going to be making a few dollars, losing a few dollars along the way, and making sure you don't lose too much, so that when the recovery comes, you at least get back where you started pretty quickly, and then capitalize on that and move to even higher highs as regards account balance. The only thing I would warn everybody is that when you look at longer term charts, the macroeconomic factors are going to carry far more weight than whatever happens to be in the news for that week, or even whatever is happening in a chart. And you do have to take a stand. You cannot be looking at a chart for these longer term movements. Well, you can. We looked at charts, but you also have to have an explanation as to why you think a chart is going to be long term, moving back to this place or back to that other place, or not moving at all. And that's where macroeconomy comes into play. You have to understand the election cycles, the job reports, the interest rates, the productivity output of each country, their trade balances, and a bunch of other stuff. And there's really good books about this. I'm not trying to teach it to you guys in a half an hour session on a Sunday evening. Obviously, if you want, and you should, want to dig deeper into this, I can recommend a couple of books that are just brilliant at giving you the bigger picture. And while they're not going to teach you everything you need to know, they are going to point you in the right direction for you need to do some more research. Don't expect to become experts in world economies and stuff like that in a couple of weeks. Some people, take lifetimes to do this, but you will be getting pretty good at it if you dedicate maybe even a few months of good reading, good research, good conversations. I'm pretty sure you're going to get there. So again, that's it. Just an explanation of why the difference this session from the ones we've been doing in the past few weeks. And as before, always risk control should be your number one. Make sure you understand the macro before you start doing stuff like this. Otherwise, as they say, children, don't try this at home. And regardless of what time frame you're trading, risk control should still be your number one priority. That's going to be it for me this weekend. Welcome to another week of trading with us. Any comments or questions before we drop? Okay, folks, thank you very much. We'll be starting late tomorrow, as I mentioned, due to the fundamental announcement coming out of Australia. So check your emails for our calendar for the week and the links to join our live trading sessions. See you then. Thank you very much.